Let's get some more reaction to the Commerce Secretary's remarks about the Federal Reserve and interest rates. Joining us now to talk more about Powell and the future of the Fed is Dennis Lockhart. He's the former Atlanta Fed president. It's great to have you here. Welcome.
Thank you, Kelly.
What would you like to address? You know, there's a couple of different aspects here. One is that growth has been better than expected. Even the labor market jobless claims data was pretty strong. What do you think is appropriate Fed policy for a moment like this? And what do you expect to play out now with both the DOJ subpoena into Powell and the way that the board and that nomination process is going to play out?
Well, first, the economic situation is pretty strong growth in the fourth quarter, at least as indicated by some of the early calls. For example, the Federal Reserve Bank of Atlanta's GDP Now indicator, 5.3% annualized real growth in the fourth quarter. That's carried over. It looks to me like the economy at the moment is running pretty hot. I think the committee is likely to interpret all that as a good time to wait and see how things develop over the coming weeks and even conceivably the coming months. So I think the action taken by the Department of Justice could very well backfire. It could actually create a longer process of transition to the new chair, conceivably. And certainly the committee is going to focus on its assigned job by Congress and not let this really affect its decision making.
Dennis, Brian, do you think we can get, as the Commerce Secretary just said on the air, do you think we can get 5% GDP growth this year?
Well, I was listening to that. And of course, you know, with my background at the Fed, I have to ask the question, is he talking about real growth or nominal growth? Is he talking about an annualized number, or is he talking about a 5% jump in the first quarter of the year? I doubt that's what he's talking about. I think he's talking about a run rate of 5% annualized. That is the run rate suggested by GDP Now going into the year. I doubt that that will hold, but I think we will see a better than trend rate growth rate for the year, above 2%, conceivably above 3%.
So, the run rate then, asking for a friend, me, the run rate then would be not a calendar year 5%, January to December 31st, but sort of a rolling 12-month period.
Well, that's the way to think about a run rate. I use that just to emphasize that the growth rate that is talked about often without mentioning that it's annualized is an annual number. It's a 12-month number. And I think the run rate gives you an indication of what's possible for the full year.
And so what about inflation? Is 3% the new 2%?
Well, inflation is not easily measured, but I think now that we have the government data back, we can look at the inflation picture and say it's elevated above the 2% target. And depending on which measure you focus on, it's probably running about 2.7% or more. That's a problem. That's something the committee really has to address. And I think the hot nature of how this economy is running at the moment translates into demand. And when there's a lot of demand, price setters are inclined to try to improve their margins, raise prices. There are commodities involved as well, where markets can get tight. So, I think this kind of pretty aggressive top-line run rate suggests that inflation is not easily going to begin to disinflate.